Good morning, and may I warmly welcome all to this meeting of the Public Accounts Enterprises Committee, and may I particularly welcome the officials from the Trinidad and Tobago Mortgage Finance Company Limited, TTMF, the Ministry of Housing and Urban Development, the Ministry of Finance, Investments Division, members of the media, and of course, members of the public who are here and are listening on air and on our Channel 11. First of all, may I inform you that the purpose of this meeting of the Public Accounts Enterprises Committee is to examine the audited financial statements of the Trinidad and Tobago Mortgage Finance Company Limited for the period 2008 to 2014. Our committee is desirous of hearing from the key stakeholders at TTMF to learn of the challenges being faced and to determine some of the possible solutions and measures to overcome these challenges. The role of our committee is to help, may I repeat, the role of our committee is to help the Trinidad and Tobago Mortgage Finance Company Limited improve its delivery of services in an efficient, effective, and economic manner. First, and may I also inform you that our meeting is being held in public and is being broadcast live on the Parliament Channel 11 and its radio frequency 105.5 FM and the Parliament's YouTube channel, ParlView. Viewers and listeners can send their comments related to today's topic via our email, that is parl101@ttparliament.org or ORG, our Facebook account, which is facebook.com/ttparliament, or Twitter @ttparliament. May I take this opportunity to introduce our members of our committee today, and I will begin by asking my colleague on my extreme right to introduce herself, and then we will ask members of the TTMF, the Ministry of Housing and Urban Development, and the Ministry of Finance Investments Division.
Thank you, Mr. Chairman. Good morning, ladies and gentlemen. I am Sherry-Ann Critchlow-Coburn, member of this committee.
Good morning and special welcome. I am Tim Gopi Singh, Vice Chair of this committee.
Good morning again and welcome. My name is Wade Mark and I'm the Chairman of the PAEC.
Good morning to everyone from the TTMF. My name is David Small and I'm a member of this committee.
Good morning, everyone. My name is Shamfa Kojo and I'm a member of this committee.
May I now invite the members or the officials from the TTMF to introduce themselves, followed by the Ministry of Housing and Urban Development, and followed finally by the Investments Division, Ministry of Finance.
Good morning, Chairman and members and other stakeholders. It is my pleasure to introduce my team. On my left is Robert Green, our Chief Operating Officer and Company Secretary. Next to Robert is Vernie Shield, General Manager, Mortgage Services. On Vernie's left is our Chief Financial Officer and Assistant Company Secretary, Brent McPhee. My name is Ingrid Lashley. I'm the Managing Director and Chief Executive Officer of Trinidad and Tobago Mortgage Finance Company Limited. Together, we make up the executive management team of TTMF.
May I ask the members from the Ministry of Finance Investments Division to introduce themselves?
Good morning, everyone. My name is Yvette Bab. I'm the Acting Director of Social and Economic Transformation Investment Division, Ministry of Finance.
Good morning. I am Ryan Maharaj, Acting Senior Business Analyst, Ministry of Finance, Investments Division.
May I ask the member from the Ministry of Housing and Urban Development?
Good morning. My name is Marion Hayes. I'm the Deputy Permanent Secretary of the Ministry of Housing and Urban Development, sitting in for the Permanent Secretary who could not be here.
Thank you very much. At this time, I'd like to invite the Chief Executive Officer of the Trinidad and Tobago Mortgage Finance Company Limited to make a brief opening statement.
Thank you, Mr. Chairman, and good morning again to all. As a state-affiliated company, TTMF's stakeholder environment is complicated by the need to provide a reasonable return on investment to its parent company, the National Insurance Board, and do the same, but in addition, fulfill the public policy mandate of the Government of Trinidad and Tobago and the Corporation Sole. To this end, TTMF has developed an operating and strategic framework essential to risk management in the financial services sector, combining profitability and performance targets with delinquency management, human resource development, and stakeholder outreach. Our financial performance over the period 2008 to 2014, the period under review, reflects an increase in assets from 2.67 billion in 2008 to 3.68 billion in 2014, or 37.8% net of the sale of mortgage assets of 250 million in 2014 to the Home Mortgage Bank. Profit before tax moved from 37.2 million in 2008 to 75.5 million in 2014, an increase of 103%. At the same time, we retained our carry risk rating of AA- investment grade, which contributed to a reduction in our weighted average cost of debt from 6.5% in 2008 to 3.83% in 2014. Our customer base as of December 31st, 2014 comprised 15,012 accounts. With the expansion of our stakeholder interests and outreach programs, we continue to increase our portfolio by a net average of approximately 1,700 accounts per annum. It is our pleasure to share with you, in the interest of improving market knowledge, details of our operations. Thank you.
Well, thank you so very much for those opening remarks. I would like, on behalf of the committee, to commence, and I would want to refer, and I would want to ask the Deputy Permanent Secretary, Ministry of Housing, the first question for clarification on this very important institution, TTMF. And I refer to the State Enterprises Performance Monitoring Manual on page 8. The Ministry of Finance and the Line Ministry collaborate in respect of the following: communicating policy issues affecting state enterprises and ensuring compliance, reviewing strategic plans and annual budgets, ensuring consistency between the government's macroeconomic policies and plans of the enterprises, and providing updated information on the composition of boards of directors, including dates of appointment and termination of members. I would like to ask, what is the role of the Ministry of Housing and Urban Development in assessing the effectiveness of the internal audit function of the TTMF? I don't know if you are in a position, Deputy Permanent Secretary, to respond to that.
I'm really new at the ministry. I only started last week, so I'm not in a position to answer this question at this point in time.
May I ask that you, we are going to ask that the ministry, through the Permanent Secretary, generate a response in writing and have same submitted to us by Monday.
I will.
Thank you. I will now ask for further clarification, and maybe Mrs. Lashley, CEO, could answer this. Could you advise us what is the present composition of the Internal Audit Committee of the TTMF, and that based on the size of the company, do you think that the audit team is sufficiently, the size is sufficient to meet the needs of the company at this time?
Thank you, Chair. The Internal Audit Department of Trinidad and Tobago Mortgage Finance is manned by a manager, internal audit, who is a former central bank examiner, an internal audit officer who's an ACCA, and an internal audit assistant. The audit team report to the chairman of the audit committee of the board, which is made up of 3 members and the company secretary as the recording secretary. At the beginning of our fiscal year, after preparation of our business plan, the manager internal audit, in conjunction with the rest of the members of the Enterprise Risk Management Committee, will meet to perform a business risk assessment of TTMF and its operating environment. On the basis of this assessment, the manager internal audit prepares an internal audit plan for the year ahead. The audit plan is reviewed and approved by the by the audit committee of the board and referred to the board for final approval. These processes are all documented in the minutes of our meetings and shared with our shareholders, the corporation sole and the NIB, after the approval by the board of directors.
What's the size of your workforce? And could you give us a breakdown in terms of those who are permanent, those who are on contract, and those who are purely temporary? Do you have that breakdown with you? In terms of the size?
I can give estimates. Our full size, our full complement is 174 persons.
Right.
Of these, approximately 140 or so are permanent employees. We have a government-assisted program unit that services government agency mortgages, and those persons are on 3-year contracts, renewable based on the growth in business or the referral of business from government agencies. We have no temporary workers.
And that would be the remaining, let's say, 30?
That's correct, sir.
Now, we are living in very uncertain and sometimes unpredictable times. where the economic challenges are very challenging, and we are in a global environment in which economic activities could slow down at times, or it can ramp up at times. At this time, we're in a state of economic downturn in Trinidad and Tobago. I would like to ask the CEO, does the TTMF have a policy for workers with regard to the negative impacts or effects of the economic challenges that we face and the economic downturn? What, if any, policy exists at the TTMF as it relates to workers in a period of economic downturn where you may have layoffs, retrenchment, dislocation? Do you have a policy to treat with such an eventuality at the TTMF?
As part of our strategic planning process for the period 2015 to 2018, we took into consideration factors that may impact our operations, including the state of the economy. In that context, we have developed early warning signals for areas of the economy where workers may be most affected by the decline in oil prices and general economic activity overall. To that end, the Enterprise Risk Management Committee of TTMF meets monthly to determine which area of our society or which area of our economy or which area of industry we would need to focus on to ensure that workers in that industry are not unduly affected by activity in their sphere and how it would impact our delinquency, if any. We have also been attending workshops and seminars by the Ministry of Labour with a view to giving guidance and counsel to workers so affected as to how they may rewrite or refinance or extend the term of their mortgages to ensure affordability during the time of downturn. Our early warning mechanisms are geared to identifying delinquency at the earliest possible time so that we can work with our customers towards recovery, and if not recovery, to ensure that the period of decline in income is properly managed to avoid foreclosure.
To treat with retrenched workers who are not in a position to fulfill their payment obligations to the company, and what measures are in place to rectify issues arising from such a situation? Do you have a public or a policy that is available to the public on that matter, or do you just deal with it on the run or as it arises, or do you have a policy that can be referred to?
Given the nature of our business, Chair, we are not at liberty to disclose our delinquency management policy as a public document. However, Trinidad and Tobago Mortgage Finance, as a systemically important financial institution, adheres to the central bank's prudential criteria on lending, and to that end, we're guided by the central bank guidelines. However, we deal with each matter brought before us in respect of arrears and delinquency on a case-by-case basis, and our officers are guided by our documented policies and procedures.
Thank you very much, Chair, for giving me the opportunity. And welcome to the members of the TTMF team. I want to ask a question. I want to start probably from a different angle, but it's the same issue regarding the potential for defaults. I noted in your documentation the company has an active EWRM committee. Could I ask, has the company assessed the potential scale of the risk regarding potential defaults, given the situation with job losses in the country?
As part of the work of the ERM committee, we identify industries where the risk may occur more so than others. So, for example, in 2015, we identified the energy sector. We extracted customers who were employed in that sector, and where customers were not up to date, we provided counsel and guidance as to how they can manage their account through the downturn.
In terms of where I'm getting at is you would have a risk register, and you would rank various types of risk in terms of the potential exposure to the company.
That's true.
So what I'm asking is, have you in your risk exercises determined, one, what is the potential risk to the company regarding any potential defaults from job losses, and how significant a risk? I don't expect the exact number, but I want to get a sense for whether the company feels it's a low risk, it's a medium risk. I'm just trying to get a feel for that.
We have assessed it as a medium risk so far. We have extracted persons who... Okay, sorry.
That's fine.
We have assessed it as a medium risk so far. We have extracted customers who have been affected to date. We have counseled those customers, and we have also stress tested the likelihood of increase in the number of customers and how it would impact our provisioning, our delinquency rate, and ultimately our profitability.
Mr. Chair, if you permit, I have one. Thank you very much. I'm happy to hear that the part of what you mentioned is very important. I think it's counseling with the customers, and I want to say that I think that's an excellent initiative of the company. Madam CEO, I just want to ask, I note in your document it says that the company, one of the key planks of its strategic goals is achieving or getting to the attainment of sustainable funding. This suggests that your current funding situation is not sustainable. That's what it suggests to me. So I want to get a sense for if my assumption following from your statement is correct, that your current funding arrangements are not sustainable. What do you mean? What's the extent of it not being sustainable? Will it affect your ability of the company to operate in the medium term if the current arrangements don't change? I want to get a sense for where the company is now, in terms of its issues around its funding situation, and what is your current outlook? Let's assume that nothing changes in the current structures.
TTMF funds its book using capital market issues, bond issues in particular, securitized by our mortgage assets. Insofar as our mortgage book grows, we will have collateral for additional bond issues. But that form of funding also leaves us open to liquidity risk and interest rate risk. It is with a view to mitigating those risks that we have developed a strategy to securitize our mortgage product, and even to consider retailing such a securitized product in an effort to provide more sustainable funding over the long term. It is to this end as well that we are a part of the team that the government of Trinidad and Tobago has approved for a merger of TTMF and Home Mortgage Bank towards the formation of Trinidad and Tobago Mortgage Bank, which would allow TTMF to sell mortgages to HMB, HMB be the source of these securitized products, and selling them off to the capital market so that our funding is more sustainable.
Mr. Chairman, if you permit me, I have two additional questions, and I want to separate what I'm going to ask. I have a specific question on the issue of essentially the mortgage-backed, the plan at least to have mortgage-backed instruments issued by the new entity. I want to ask the issue of the merger. Through the chair, I would like to ask, I note in the document there's reference to an analysis done. I want to get from you the sense of the gist of the analysis, And through the chair, I would like to request a copy of the analysis that led to the recommendation. Because the document says, based on the analysis, it generated the recommendation, and there's I think a PwC study. I think it would be useful for the committee members to understand where this process is going, how it came to be that the recommendation arose. So, other than the data request, I want to get from you, Madam CEO, what is your sense of the recommendations that came out of the analysis, and where you sit, are you confident in the recommendations that came out of that?
Through the chair, the analysis was, the PW analysis was spearheaded by a team representing the National Insurance Board, the Ministry of Finance, TTMF, and Home Mortgage Bank. The National Insurance Board, as the parent company of both TTMF and HMB, has since asked for an analysis of the formation of TTMB in the interest of NIB. We are not yet privy to that analysis. It is still with our parent. However, suffice it to say that we have been advised by our parent company that the board of the National Insurance Board has appointed a consultant to implement or to review the analysis and make recommendation to NIB on its feasibility and implementation.
I'm a bit troubled. Your response is, based on your response, the analysis was not shared with your institution. You're going to be directly affected by it, and then it's going to be reviewed by another party. I am confused in that process. I would have thought that your institution would be key to being able to be part of the analysis and to understand and inform. So I'm troubled a bit by that question, and I will ask question later, Mr. Chairman. I have one other question in this round, Mr. Chairman, if you permit me. I have a concern. I see that in part of the plan is for the new entity, TTMB, to use the mortgages to create new investment products. I have a concern that I'm flagging, and I'm not saying that I think that the TTMF factory is a good entity, but we're all aware of what happened with the issue of mortgage-backed securities in the United States market that led to the financial collapse. You know, this is a bit of information that I'm very, very okra with. And the issue of mortgage-backed securities, and then because the selling the securities attached to the mortgages became so lucrative, people started to lower the standards for the mortgages, creating what's called ninja mortgages, no interest, no job, no assets. Because all they wanted was a mortgage to package the instrument to be able to sell to investors. And that led to the collapse of the entire economic system. So that I am just saying that if this is part of the plan for the new TTMB, to be able to take mortgages, package them, and create securities to sell on the local market, I want to know what safeguards are we going to have in place to ensure that this is properly managed to protect investors in these securities. Because immediately, you're in the business more than I, but as a layman, you understand if you put mortgages together and you sell a security based on the mortgage, if the inherent mortgages are bad, then you have an immediate problem. And it becomes systemic depending on the scale of the business. I would like to understand, Madam CEO, what safeguards are envisaged? And I'm concerned if you could answer because you haven't seen the analysis.
In the first place, whether we have TTMB or not, the prudential criteria to which we adhere would remain. So credit quality is not an area of compromise for us. It is on that basis that we have our AA- investment grade, and it is on that basis that our bond market activity has been very successful in the past. It is not our intention. I think that was the essence of the failure of the US system. It is not our intention by any means, nor is it that of our regulator, to compromise credit quality in the interest of expanded funding. Having said so, though, I want to go back to the comment in respect of the analysis. We participated very actively with the NIB and HMB in providing data to the consultants to develop the feasibility study on the Trinidad and Tobago Mortgage Bank. The appointment of a consultant was fairly recent, within the last month or so, and we have had discussions with him, and I anticipate that as we move along, our participation will increase towards the fulfillment and implementation of the TTMB.
Thank you very much, Mr. Chair.
Yeah, thank you very much, Chair. Just a few questions to the team. And the first is, HDC is in the process of looking after the citizens who are requiring homes and who can't generally afford to buy one on the open market. What's the relationship between TTMF and HDC? And if there is a relationship, is that relationship given in a directive? Is it in writing, or is it just an informal relationship? Could you just, and I have some questions to follow on that.
As the administrator of the government's 2% and 5% mortgage regime, TTMF maintains fairly close business relationships with agencies of government that provide housing. HDC is one, the THA is also one, so is Silwick and the Land Settlement Agency, to name a few. TTMF is not the only provider of mortgages for such developments as is offered to the general public by the HDC, but we administer the license to occupy portfolio and the rent to own portfolio on their behalf. So in essence, at best, we have a first bite of the cherry in terms of new business. We have been working with the HDC in respect of mortgage or conversion of license to occupy to mortgages over the last 3 years.
Could you just explain that a little more? I need a little more clarification on that last statement you made there. Go ahead. Slower.
Okay. Through the chair, HDC, for an inability to be able to provide vested deeds or provide a deed of sublease to prospective homeowners, had established license to occupy so that already constructed properties would not remain empty. In applying a fee or payment to the license to occupy, HDC based the license fee on the eventual mortgage installment. So TTMF was asked to pre-qualify homeowners, determine what the mortgage payment would be based on the purchase price, and collect the fee on behalf of the agency, for which we received an admin fee of 10% of the payment, the balance going towards the principal balance on the loan or on the purchase price.
How long that arrangement continues for, until the person really gets the mortgage from TTMF?
Well, the person is at liberty to get the mortgage as soon as the legal documents are in place. And we've been working with the HDC to churn out those based on developments, on location, to churn out the deeds of sublease so that license to occupy can be converted to mortgage.
Okay. Is there a written document that gives the relationship between HDC and TTMF, or it operates ad hoc?
No, we have an agreement for administration of the portfolio on behalf of the HDC.
Yeah.
We have an agreement with the HDC, a formal agreement for the administration of the portfolio on their behalf.
All right, okay. Your funding. Okay, I'll come back to that. You gave a situation of customers. You have, well, TTMF, my understanding, has been operating for about 50 years plus. And you have a customer base out now of 15,012.
That's correct, sir.
And you have now an annual increase of about 1,700 per year. What period of time was this acceleration? Well, now you have 15,012. How many would have had their mortgages with TTMF and concluded their mortgages over the period of, let's say, if you have any information, over the last 50 years? And these 15,000, if you break it down about who are less than 5 years, 10 years, 15 years, 20 years, what, 25, 30? You have that figure at all?
Those numbers, or the tenure to maturity of our loans, will be reflected in our financial statements, and I can't say what they are off the cuff, but they're certainly included in the notes to the financial statements by geographical area and by term to maturity.
You're giving me a broad demographic type of answer, but if I can help you focus, if you have 15,000 people before you now who are paying their mortgages, just get an idea of how many would have been new mortgagees within the last 5 years or the last 10 years, and how much maturing closer to 25 and 30 years. Would you be able to give that answer? If not, we'll like it in writing. You have your colleagues there. I don't know if they have the answer to that.
Sorry, through the chair, we're not in a position to give accurate figures where that is concerned, but we can.
Average? No?
No, I'd be guessing as to what our annual maturity of loans. I would be guessing, Chair, as to our annual maturity of loans.
All right. Well, let's focus for the last 5 or 6 years. How many new customers would you have had over, let's say, the last 5 or 6 years? Because we're inquiring 2008 to 2014. So if you can go back 14, 13, 12, 11, etc. How many new customers you would have had during that period of time?
As of 2012, so this will be 2012 to the present, our rate of growth was approximately 1,000 accounts per annum. In 2014, we added about 1,200 accounts, and we anticipate 1,700 this year. And this is net growth. So it takes into account prepayments and the maturity of loans.
Okay. Have you set yourself a target or targets for the conversion of HDC mortgages to TTMF? Have you set any targets in your strategic plan? You would have probably wanted to do that based on what was coming before you. You said 1,000 in 2012, 1,200 in 2014. And you said at an average of 1,700. So what was it? Previously there were more, because if they have 1,000 in 2012 and 1,200 in 2014, where are you getting this average of 1,700?
The conversion of the license to occupy has accelerated over the last 3 years, because we're now able to get deeds of sublease to convert the license to occupy to mortgages. Over the period 2009 to 2012, we only had the 2% mortgage at that time, and the conversion to mortgage was relatively slow.
Oh, so now you have the 5% mortgage, right? Well, I'll come back to that in a second round. I was asking you about the targets that have you set targets for realization for the future based on the demand that has been coming through to you?
We most certainly have, sir.
You care to give us any information on what your targets might be based on your strategic planning?
Our targets for the conversion of LTOs is 300 accounts. Our target for open market business.
That's abbreviation. Could you just explain that abbreviation? LGOs?
License to occupy accounts.
LTOs?
LTOs, yes.
300?
So we intend to convert 1,300 license to occupy accounts to full mortgages. And we are also targeting 700 accounts on the open market, that is home equity loans, purchase of land, new mortgages outside of government agency business.
I'm trying to get a clearer picture of where TTMF in 2015 is here. How many more conversions of mortgages would TTMF strategically be thinking of giving at an annually over the next 3 or 4 or 5 years? You're giving me figures of 300, 1,200, etc. What is your thinking based on what has been before you for the last number of years?
Okay.
You must be able to project to the future So you must have an expectancy of these amount of applications coming before you. What do you foresee for the future?
The HDC in particular has indicated to us that they have 6,000 properties to be converted to mortgage. But it has been our experience that we don't get 6,000 in any one fiscal year. So we might get 6,000 over the next 5 years, say. And that is why we have targeted 1,700 for this fiscal year.
Okay.
And it will accelerate as we go forward.
Thank you for the clarification. Now let's go to the funding part. What level of funding had been given to you over the last few years, let's say 2008 to 2014, we're examining? Are you in a position to give us an idea of what funding was provided to TTMF annually to help you in your work that you're doing?
TTMF is not a recipient of funding from the government of Trinidad and Tobago.
Go on, explain it.
TTMF securitizes its own mortgages to raise funds on the open market. So using our mortgages as collateral, we issue bonds that are invested in by insurance companies, pension funds, and other sophisticated investors.
Stick up in. That goes through NIB?
No, sir. We go to the market ourselves.
We
would in the most current issues, we have used the Answer Merchant as our facilitator. We have used Bohr Securities as our facilitator, and we also sell mortgages through the Home Mortgage Bank.
Okay. On the bond market, which you are speaking about, what would be your, how much, what in figures, what sort of thing you're looking at from 2008 to 2014? How much would you have secured in bond for your mortgages in 2008, 2009, 2010, 11, 12, 13, 14? You have any idea of that?
Our bond issue activity started in 2009 with an issue of 500 million. We sold mortgages to Home Mortgage Bank over the period 2008 to 2014 of 250 million. We have also converted a short-term facility that we had with NIB to a long-term debt. So overall, over the period, we have raised more than $1 billion.
1 billion?
Yes.
And how much have you sold back to, you have raised that on the bond market?
Yes.
Who would have stood the guarantee for that?
Our loans are collateralized by our own mortgage portfolio.
Right, okay, thank you.
Mrs. Coleman, please.
Thank you, Mr. Chairman. Ms. Lashley, I would like to go back to a question that the chairman would have raised in terms of defaulters. Now, it is very commendable that the TTMF would counsel persons when they may be in default or they would have experienced some difficulty. But I would have been approached by a couple of my constituents who would have indicated that they would have had loans with the TTMF. They would have been paying those loans for maybe 10, 15 years, and now they are in difficulty because they may have been retrenched or otherwise. And the TTMF has indicated that they are likely to foreclose and dispose of the property. Do you have that situation, and what percentage of your loans or persons who may have defaulted would you have sought legal redress?
The foreclosure process that we use at TTMF would not allow foreclosure of anyone who lost their job in this calendar year. The process calls for ongoing follow-up after you've been more than 10 days in arrears of your monthly payment. After you've missed 3 monthly payments, we consider the debt to be non-current. In other words, it's non-performing. So we accelerate the follow-up process and invite you to come in and sit with us so that we can make some arrangement to clear the arrears. It is only after 6 months in arrears that we start the process of demanding on the arrears, which leads to the legal process. Given that we must go through the courts before we have permission to foreclose, that can very well take as much as a year or two. And in most instances, the court will have a stay of execution of the repossession order in order to give the customer an opportunity to either invite others to participate in the debt so that he or she may recover, or move on to another financial institution. So generally speaking, it takes almost 2 years for foreclosure to take effect at TTMF.
So I can take from that we would not have had any persons who would have had foreclosure, whose loan would have foreclosed in under 2 years.
That's correct.
Okay, thank you. In terms of the 2% that is given on mortgages, is that fixed or is it variable? I've known of instances where you would have gotten the loan at 2% and it was for the life of the mortgage. I am being advised by some of my constituents again that they understand that that is no longer so, that they can go in and sign up for a mortgage at 2%, but it is no longer fixed, it is variable. Could you shed some light on that, please?
Both the 2% and the 5% mortgage programs have graduating interest rates over the life of the program. In the case of the 2%, the rate increases by 0.5% on the anniversary date of the loan until it gets to 5%. In the case of the 5% mortgage, the rate increases by 0.5% per annum until it gets to the open market rate, which is now 7%.
Is this information widely known? Because people are still of the belief that when they get a 2% mortgage with the TTMF, it is for 2% for the life of the loan. Is this made explicitly clear to the mortgager at the point of signing up for this mortgage? And when would this change have taken place?
The change took place in October 2014 with the introduction of the 5% mortgage program. And to go back to your first statement, yes, it is made absolutely clear to the mortgager the graduation of the interest rate, because the letter of offer makes provision for the graduation, and the letter of offer is signed based on a one-on-one with the customer also having the opportunity to go away with the document for 2 weeks before they are required to sign it. So it is an integral part of our closing process to advise of the graduation of the interest rate.
Thank you for that clarity, but I just want to point out to TTMF, and maybe you can speak with your persons there, because there are persons who have indicated that they were not aware of this graduation in the mortgage. When they would have signed up, they were of the understanding that the mortgage would have been for 2% over the life of the mortgage. So maybe there needs to be some sort of public awareness, and even when we speak with the mortgagers, because some of them have indicated that they were not aware. Okay. Who are your key stakeholders, and how has TTMF's relationship with those key stakeholders impacted its profitability?
Our key stakeholders are our parent company, the National Insurance Board, the holder of our minority interest, the corporation sole, the Ministry of Finance for its advice and counsel in respect of how we manage our business, the Ministry of Housing and Urban Development, our line ministry, our government agencies who provide developments for funding, HDC, THA, SILWIC, LSA, our union, of course, our customers, and our staff.
And how would you describe your relationship with them, and how does it impact your profitability?
I think TTMF has an exemplary relationship with all of its stakeholders. In the case of the parent company, we are required to make a presentation of performance at least once annually in the past, and we have done so. We share our minutes with our shareholders. In the case of HDC, we have monthly meetings as necessary in order to accelerate the progress of our business. Our Assistant General Manager, Mortgage Origination, visits Tobago regularly to confer with the THA, as do I. We also keep in touch with Silwick from time to time because they refer business to us. We also provide for training of their people so that they can do pre-qualification of possible candidates for housing. We've been working very closely with the LSA in referring their business, and they're almost ready to start mortgage of new settlements. In respect of the union, we have an amicable relationship with our union. As a matter of fact, we have been able to negotiate our collective agreement to December 2019. And in terms of our customers and staff, our last customer survey indicated that our brand awareness had improved significantly over the period under review, and we continue to nurture that. We have had an employee survey to give feedback on how our employees feel about the team, the organization, and their job satisfaction. And we now have an employee team who have developed an action plan to improve the results of the survey.
Ms. Lashley, I want to commend you because I know it is not an easy task to be current with your collective agreements. So I would like to highly commend the TTMF for achieving that.
Thank you.
Mr. Chairman.
Before Dr. Tim Gopi Singh and Mr. David Small resume their inquiries, Madam CEO, there's a concept known as truth in lending. And I myself am flabbergasted because I would have thought that when an advertisement is issued that a mortgage can be obtained at 2% and 5% respectively, one would have come to the conclusion as an ordinary, informed observer or customer that one of the things that I know TTMF prides itself in is ensuring that when you look at mortgage institutions, TTMF has a stable, fixed rate of interest. That is what I believe. I may be wrong. But when you explained to us a short while ago that the 2% is not really 2%, the 2% really means 5%, and the 5% really means 7% market rate. Now, I'm saying that many customers who are coming to TTMF may not really be fully au courant with that before they arrive there. It's like courts mamagaing people with advertisement to come in and buy furniture. And when you check it out and so on, it is the backlash is very severe. So what I'm asking is that what have you done as the CEO and the company done in order to ensure that the minds of customers are completely disabused when they reach to TTMF, that it is not 2%, that is a misleading percentage. It is really 5%. And when we say 5%, it really means market rate 7%. Is there a campaign, a marketing strategy that you have that would inform the ordinary customer before he comes to you that this is the real rate of interest? Or do you wait until the customer arrives and then you explain to him on the anniversary date, it goes up by 0.5%, and then until it reaches a certain percentage? Do you inform customers in advance, or do you wait until customers arrive? I believe that I would like, as a customer, to be aware of what this thing is about before I approach you. You want to share with us what the thinking of the TTMF is on that, and whether you have a marketing strategy to level with the population. It may not be your fault as a CEO, because you take in instructions and you have to survive as an organization. But I'm saying, what is the marketing strategy to level with the population so that when they get there, they know what they are into?
Okay, if I might, Chair, let me go back a little bit and just describe how we've come to this place. First, the 2% and 5% is not TTMF product, is not a TTMF product. We administer this product on behalf of the government of Trinidad and Tobago. And because we do that, the difference in interest rate between the 2% and the normal lending rate, which I'd put in inverted commas, as defined, for example, by the MMRR, the Mortgage Market Reference Rate. The difference between the mortgage market reference rate, or the rate that you would get in a commercial bank, and the 2% is subsidized by the government of Trinidad and Tobago. That being the case, in an effort to reduce this subsidy over time, the graduation was added to the product in October 2014, both for the 2% and the 5% mortgage. Now, the graduation is fixed. The graduation, you know what the graduation would be. When we go through the application process, we tell you how it would graduate and what it would mean for you next year, the year after, and the year after. The graduation takes about 6 years before it gets to 5%. And then we explain that when you get to the 5%, it is likely to stay. We don't say it will stay. TTMF is not at liberty to define government policy. So as it is now, it will stay. We refer to our interest rates as stable as opposed to fixed because we want to be able to decrease it too in the event that the market suggests that, as we did in October 2012 when we reduced our lending rate from 8% to 7%. So our rates are stable, they're not fixed, and we also go through each element of the lending process with our customers as soon as they sit before us to pre-qualify, up to and including when they sign their letter of offer accepting the loan and the loan agreement.
Could you tell us, for the year 2014, 2015, 2016, how many customers have been counseled by the TTMF, as you have described it? You did indicate to this committee that you do go out there. I guess you are invited or you are asked to join, maybe, I don't know who invites you, but you go out there and there are workers or there are customers who may be workers who have been retrenched. And you engage in what is called counseling services to tell workers and so on, listen, even though you have lost your job, it does not necessarily follow that your house would be taken away from you immediately. There's a process. How many counseling sessions you would have had in 2014, in 2015, up to this time as we speak, and how many workers or customers you would have been able to counsel during the period that I've identified? You have that information with you? If you don't, you can generate the information in writing and submit it to us. But if you can give us a summary, we'll appreciate it.
As of 2015, when the economy, when the price of oil started to decline and we started looking at sectors that will be impacted, we had determined up to the end of December 2015 that we had 78 customers who were exposed to the decline in the economy. All of these customers have been contacted, and in cases where they are already in arrears, we are working with them to either rewrite, refinance, or include a younger person in their family who would be able to assume some responsibility for the loan so that we could extend the term and in so doing, make it more affordable to continue to make the payment.
Your non-performing portfolio is stable at this time. You don't have a challenge in terms of persons unable to service their mortgage commitments in any large numbers. What you have, as you said, out of a customer base of 15,000, only 78 persons have fallen through the cracks, so to speak, and you're seeking to, coach them and mentor them and try to get them back on their feet before any action is taken where you may have to go to court to seek foreclosure.
No, Chair, it is not only 78. 78 have fallen victim of the current economic circumstances, but our delinquency portfolio is greater than that.
Would you like to share with us in writing what that is?
Yes.
Your
Yes,
delinquency portfolio. I think Mrs. Coburn would like to follow up, then Mr. Small, then Dr. Gopi.
Ms. Lashley, just one question. With respect to persons when they come in, at the point when they come in, either for the 2% or the 5% loan, does your an assessment include determining that they would be able to service the mortgage when it goes to that 5%?
Yes, ma'am, it does.
Okay, thanks.
Can I just ask a follow-up question to that? You said based on the mortgage market reference rate, those who took a mortgage at 2%, at the anniversary date, it goes up by 0.5%. So 2 will go to 5% within 6-year period. And a 5% will go to the market rate if it is 7% in about 4 years.
That's correct.
You said the state is subsidizing the difference between the 2% and 2.5% and 3% and 3.5% and so on. Is the state subsidizing that? And so does the client have to pay 2% or they have to pay 4% after 4 years and 5% after 6 years? What happens? Does the state subsidize that increase? Can you be clearer in that aspect?
No, the state doesn't subsidize the increase. What is subsidized by the state is the difference between the funding cost and the 2%. Because we raise our own funds, so we have to raise funds at market rate. If we were to lend at 2%, having raised funds at market rate, every loan would be in deficit. So the state provides a subsidy for the market cost of borrowing minus 2%, which is the return on the portfolio, and then we administer on behalf of the state.
So basically the state subsidizes it in real.
It subsidizes the cost of funding.
And you charging that, does that increased cost go to the client, or does it stay at the 2% for the client?
No, the increase of 0.5% per annum till it gets to 5% is for the client. So in essence, at the end of the day, the state's subsidy rotates and spreads over a wider base, because you will go up to 2.5% and from 2.5% to 3%, but somebody else coming behind you will get the 2% in their first year. Yeah. So it allows the state to spread the subsidy over a wider base.
So a client must be prepared to go from 2% to 5% eventually. They must be prepared to pay the difference yearly of 0.5% increment every year for 6 years.
Yes, sir.
And from 5% to the market rate, if the market rate is 8% now, from 5% to 8%, they have to pay the extra 0.5% per year for 6 years.
5 to 7, yes, sir.
All right. How many, just on that, how many now in your portfolio have mortgages with less than 2% mortgages, and how many with 5% mortgages? Do you have any idea?
Our 2% portfolio is now at $173 million, and our 5% mortgage is just creeping up at $15 or $16 million. The 5% is relatively new. It started in 2014.
All right, I'll ask other questions fair to my colleagues, and then I'll come back.
Yeah, Mr. David Small.
Thank you very much, Mr. Chairman. You all have asked some of my questions already, but that's fine. Because the TTMF is a good entity. I am very, very happy, probably because I'm a customer, so that's...
Oh, great, thank you.
Madam CEO, I just have a couple of questions, and I've been asked by the Secretary to just ask a question from a member of the public. Could you help me, and if it's commercially sensitive, the committee understands the question I'm going to ask, and we would appreciate your response in writing if it's so. Could you give me an estimate of your total mortgage portfolio? What percentage of your mortgage portfolio is comprised of the 2% and the 5% program that you administer totally?
Well, I have the figures as at 2014.
That's fine.
As at 2014, 165 million are 2% mortgages. Only 391,000, as I mentioned, the 5% started in October 2014. So as of December 2014, only 391,000 were 5% mortgages. We have approved mortgage company mortgages of 859 million, open market mortgages of 2.1 billion. For a total of 3.2 billion as at the end of 2014.
So that these 2% and 5% mortgage are really relatively small portion of the business that you currently manage right now.
As of 2014, it would have been relatively small, but as I mentioned, the HDC and the THA had accelerated their conversion of license to occupy to mortgages since that time. So, as a matter of fact, that is an area of our focus in this next strategic period.
I just want to interrupt my colleague for 1 second. Could you, to follow up on what he has asked, would you be in a position to provide a detailed breakdown on the number of warm bodies that are involved in your 2% category, given the percentage or the number, the value rather, that you gave 159 million. Then you talked about, for instance, those who are in the open market arrangement, close to about 2 billion or thereabout in the last 2 years. How many persons are involved in this 2.1 billion over the last 2 years? And could we categorize them? Those who might be accessing at, let's say, 300,000, or may I ask, at what level you start in terms of accessing mortgages via the TTMF? Could you share with us, you start at 2% rate, but what is the value? Is it $100,000 in terms of home ownership? Is it $200,000 home ownership? Is it 250,000? So you start at 2%. And then you have, let's say, about 150 people accessing the 2% rate in terms of properties valued at 250,000. Then you move from 250 to, let's say, 300,000. And then you go to 400,000, and then 5, and then 1 million. So how, I'm trying to get a breakdown in terms of the distribution of the 2.1 billion and the 159 billion. How many people are involved in this? And let's say the range that would cover the numbers that you would identify. You don't have to give that today. You can generate a response in writing for us. I just interrupted my colleague, but you can continue.
Certainly, Mr. Chairman. It's fine. Interrupt me. Yes, Madam CEO. I thank you for your earlier response. I am pleased that, at least what I wanted to ask, that given the ongoing plans by the agency with this program, do they have any projection, or do you have any projection of how big this 2%, 5% program, do they have any projections for where they expect it to go to? Do they have listen, in the next 5 years, we're going to estimate that probably going to add 500 a year? Is there any sense to how big this program is going to get?
We can only tell from what the numbers that HCC have provided, and they have indicated that they have 6,000 properties that for funding for mortgages over the next 2 to 3 years. Now, TTMF is not the only provider of funding to HDC's properties. The customer can go anywhere for his funding. So not all of that business will come to us. But we plan our business based on our own resources and our capacity for new business, keeping in touch with the HDC as to when the properties will be available for conversion.
No, that's useful. You've helped me at least with the potential universe of business. I want to ask a question to get some information from you. You have something called your Home Ownership 101 program. And I've now heard of it for the first time, so that perhaps I am not reading or looking at your website enough. But could you help the committee understand what is your Home Ownership 101 program? What does it entail, and what is it supposed to do?
Our corporate campaign is based on education of the population of Trinidad and Tobago on mortgages and what is necessary to obtain a mortgage in terms of savings requirements, the documentary requirements, what your installments are likely to be, what kind of credit discipline is necessary in order to obtain a mortgage. So to that end, we've been working closely with other government agencies and even the private sector on doing lunchtime sessions in offices, roadshows in the malls, in HDC developments, in the THA developments, in order to educate the population on their ability to acquire a home.
I am a strong supporter of activities like this, because I believe, Madam CEO, that there's a lot of people out there who could probably qualify for mortgages, but they don't understand the mechanics. Yes. They don't even understand what they're able to do. So that the more that the TTMF as an agent for providing these services could get the message out there to people in an outreach program, you have the committee's support on this activity. Because I believe that given the situation with housing as we have it now, I still think that a lot of people out there who are earning well don't understand that they could actually qualify for a mortgage. And someone should probably explain to them that, one, you can qualify, and then what are the benefits of owning rather than renting. Mr. Chairman, if you permit me, I have one additional question. And you said that I was going to ask if you collect customer feedback. I was looking at the information, and so I understand you do a customer survey. But I have a question on that. How do you do that survey? Everybody is all techie and wonderful now. How do you do that survey? And in doing the survey, did you get any of the negative feedback referred to by the member, Minister Coburn, regarding people saying, listen, we took a 2% mortgage, but we didn't understand that it was going up every year by 0.5% until it got 5%. So I want to know, what was the media you used to gather the survey, and what type of feedback did you get on your customer survey?
Okay. Our customer survey was done by an advertising agency over a period of about 3 to 5 months in 2015. And the feedback from that survey was used to determine our marketing and advertising program going forward. As a matter of fact, it is through that survey that we developed the campaign for Home Ownership 101, or Mortgage Education 101 as we call it. We also have a customer feedback policy where customers give feedback through our website, through Facebook, and via telephone. The customer feedback is managed by the executive assistant to the managing director, CEO, and the policy requires that the customer gets response or acknowledgement within 3 days, with 10 working days to provide solution or explanation by the department head. We've been following through on that kind of policy. We also get compliments, by the way, which is why we call it a customer feedback and not a customer complaints policy. Yeah. We also get compliments, and staff members who are beneficiaries of those compliments are awarded. We have a reward recognition program, and those staff members are rewarded through that program.
I want to thank you for those responses. Mr. Chairman, proceed. I have one other round when you're done.
Yes, of course, and I recognize Dr. Timbo.
Madam CEO and the team, could you help us conclude with clarity the issue of the increase of 0.5% from 2 to 5% and from 5% to the market rate? After they've gone through the 6 years and they've reached the 5%, which they are paying for 6 years, 2 to 2.5 to 3, 3.5 to 4 every year, do they continue to pay at 5% or they go back down to 2%?
They continue to pay at 5% to the maturity of the loan.
So it's just a 6-year period that they move from 2% to 5%.
That's
and
correct.
After that, the loan is 5% based
That's
on what
correct.
is existing.
Based on existing government policy,
All right.
yes.
The mortgage market reference rate changes every so often, based on the repo rate and all of that, and the lending rate and the borrowing rate and so on. Now, when they move from 5%, and the market rate this year might be 7.5%, next year will be 8%, the following year could be 9%. Where do they stop when they take a loan when they take a mortgage at 5%? Suppose the market rate keeps going up. Where does TTMF come in and say, well, this is the maximum rate that you have to pay? What is the maximum rate does the 5% have to pay? Is it 7%? Is it 8%? Could you enlighten us?
The mortgage market reference rate does not apply to Trinidad and Tobago mortgage finance. The mortgage market reference rate applies to commercial banks. Our rate is determined.
But you are using that incrementally half year to reach the mortgage market reference rate. You're using the mortgage market reference rate for you to move from 5% to something. So by you saying it doesn't affect TTMF, is not necessarily so. It is. You are using the mortgage market reference rate from 5% increased by 0.5% every year. To what level?
TTMF's current lending rate is 7%, as approved by the Minister of Finance. We are not subject to the mortgage market reference rate. Our market rate is 7%.
So the maximum, the 5% will have to pay is 7% within after a 4-year period.
That's correct,
so
sir.
The 5% seals at 7% after
That's
4
correct.
years, and the 2% seals at 5% after 6 years.
That's correct, sir.
All right. Well, thanks for that clarification. Yeah, sure.
But you said the rate as determined by the Minister of Finance. So is it that TTMF's rate is determined by the Minister of Finance as opposed to the MMRR or any other rate?
Under the Housing Act, or the regulations that accompanied the Housing Act, TTMF, as an approved mortgage company, its rates or the regulations to the Housing Act defined the rates for the approved mortgage company as a rate that is determined by the Minister of Finance. When the HDC was converted to the HDC from the NHA, the regulations under the Housing Act were repealed. So there was no approval from the minister anymore. However, we have stayed close to the Ministry of Finance in making recommendation for the interest rate on the approved mortgage company mortgages and now on the 2% and 5% portfolio.
Thank you. Madam CEO and members of the team.
Before Dr. Tim, are you saying that the regulations governing the Housing Act having been repealed, it is more or less moral suasion that is being exercised by TTMF as you seek to collaborate with the Ministry of Finance to ensure that you maintain that rate that has been in existence for a little while now, which is the 7%. And therefore, are you saying, God forbid, that you have, for instance, a Minister of Finance who might want to go beyond that? What would be the situation be for mortgage persons who have mortgages with the TTMF? It can go from, if you do not have a sober-minded or stable-minded or sensitive Minister of Finance, it could go from 7 to 7.5 to 8%, and that would obviously affect your portfolio. So are you saying in circumstances like what I have described, there's need for us to revisit the repeal of those regulations so that there will be a law indicating the TTMF through the Ministry of Finance that you cannot go beyond a certain level as existed before the repeal of the regulations. I would like to have your input on that.
It is always best to have guidelines and policies and procedures documented in order to provide guidance so that discretion does not, so discretion comes with equity and transparency. The repeal of the regulations, in my opinion, and this is my personal opinion, did not inhibit the need to confer with the Minister of Finance or the Minister of Housing Development in our adherence to government policy. But that is my personal opinion. I agree with you that someone who's sitting in this chair who may have another kind of opinion in respect of discretion in such matters may operate differently. But TTMF has always adhered to the moral suasion of the Central Bank of Trinidad and Tobago and the Ministry of Finance, and promoted its relationship with the Ministry of Housing and Urban Development, the HDC, and other government agencies. So, in conclusion, Chair, I think it is advisable, but it will not stop us from doing what we've always done.
Yeah, thank you, Madam CEO. What percentage of TTMF business is related to HDC, and what percentage is related outside of HDC, if you can give us a little idea of your business portfolio?
Through the Chair, I would have to give you those numbers in writing, because as it is now, we bulk the 2% portfolio. In October 2014, the government of Trinidad and Tobago allowed for the 2% and 5% program to apply to any property anywhere. So we have bulked the 2% together and not restricted it to HDC properties only, or THA or whatever. So I would have to do a little analysis of our numbers to give you that
to see
figure.
what is existing at the moment
Yes.
from the HDC.
Yes.
Now, the population is made to understand that if a person is earning less than 10,000 per month, they can qualify for the 2%. Is that a household 10,000, or is it the person who applying for the mortgage?
It is the breadwinners. The $10,000 is defined as the breadwinner's income. It used to be family household, but it is now the breadwinner. And if the breadwinner needs additional income from another member of the household, it can be included.
Okay, so collectively you can go up to 10,000 to get the 2%.
That's correct.
Now, recently, the Honorable Prime Minister made the announcement that the ceiling limit for the 5% was brought down from 40,000, the breadwinners, to down to 30,000. Am I correct?
No, sir. It is my understanding that the Prime Minister's restriction or limit on the is in
not his
terms,
restriction. He has is the state.
The limit that he had declared was that of the HDC in terms of its allocation of properties, not the financing of properties.
All right. And now
because it doesn't have to be an HDC property.
It doesn't have to be.
No.
Okay, good. Now that it has been brought down to 30,000 as the total amount that a household, the people can earn, how has that impacted on HDC? Have you seen many more people coming forward, or since then, or has that been affected at the moment, or if it has been affected, what would you say in terms of value or number of people coming forward to access those loans?
I wouldn't be able to say because we're not part of the allocation process. As I mentioned earlier, most of the work that we're doing now with HDC is people who already have homes, they're paying a license to occupy, and they're now coming to us for conversion to mortgage. In most instances, those persons have already paid, contributed to the purchase price of their properties.
Well, on the private market then, the non-HDC, have you had people coming in who are earning up to 30,000 and are coming for houses under the HDC? If so, how many?
Not under the HDC. Those persons are 5% mortgage persons, their property values can go up to 1.2 million.
No, I'm asking you, outside of HDC, from the private sector, who are seeking TTMF funding, up to the value, if they're earning up to a value of 30,000 monthly, how many people have come forward recently, if that has been affected?
Okay, that too I would have to give you in writing.
You said you gave a figure of 163 million in 2014 versus 16 million. Would that 16 million incorporate those who are coming under the less than 30,000?
Yes, it would. Because if you earn more than, even if your property is valued at 850,000, but you earn more than 10,000, you'd pay the 5%, not the 2%.
Yeah, but what I'm trying to get from you is how many people have come forward since that announcement?
I would have to investigate.
Right. Okay. Thank you very much.
All right. May I ask, Madam CEO, given your written submission to us, you indicated that the company, which is a TTMF, utilizes an automated financial reporting system known as Prologue for record keeping and the management and analysis of its financial reporting systems. Now, these systems culminate in the production of financial statements with accompanying variance analysis to plan performance monthly. Could you then explain to this committee the reason for the delay in submitting the audited financial statement for fiscal year 2015 to the Office of the Parliament? We have not received thus far your audited financial accounts for fiscal year 2015. That is why we are stuck between 2008 to 2014, because we don't have the audited financial accounts of the TTMF for 2015. So I don't know if you have submitted it or you have not, but we don't have it before the Public Accounts Enterprises Committee. You wish to clarify?
Chair, I can't say why you don't have it, because we've submitted it, and the representative from the Ministry of Finance would be able to support me in the fact that we have submitted. We've met all our compliance deadlines in respect of our statutory requirements, both to the Parliament, to the Ministry of Housing, to the Ministry of Finance, and to our shareholders. We are not aware of our audited financials have been published.
Well, there is a gap, and maybe the distinguished member from the Ministry of Finance Investments Division can indicate to this committee if that report has been submitted to the Ministry of Finance and the Investments Division, why that report is not before the Parliament and therefore before the Public Accounts Enterprises Committee. May you probably...
Yeah. Chair, the financial statements for 2015 were submitted by TTMF to the Minister of Finance. However, their AGM is to be held on the 24th of June this month, and subsequent to that we will submit to the committee.
You have any idea when that report, financial audited report, was submitted to the Minister of Finance?
Probably about a couple of months ago, but the policy of the ministry is that we send audited financial statements subsequent to the annual general meeting.
Oh, subsequent, okay.
Chair, if I might, the deadline for submission of our financial statements to the Trinidad and Tobago Securities and Exchange Commission is March 31st. The deadline for submission of our annual report to the SEC is April 30th annually, and those submissions have been made.
Okay, all right. I see that you have. Oh, sorry. I recognize the proposal. Sorry.
Thank you, Chairman. I've been trying to get your attention for quite some time. Director Lashley, I have a question as it relates to the working relationship between the TTMF and the HDC, because I know that there are some concerns relating to HDC mortgage applications and the completion. I want to know what are the challenges and what could be done to make the process more seamless.
We had some challenges, as I mentioned earlier, in respect of the vesting of state lands in the HDC, so that the HCC could then issue a deed of sublease. Vesting orders, of course, must go through the Parliament. So this took some time. We are now in a place where, having had the deeds of sublease prepared and executed by potential mortgagors, we have accelerated the conversion of license to occupy to mortgages, and therefore it is intended that the process will go much easier. We speak to the HDC, well, I speak to them monthly, but some of my staff speak to them almost weekly in terms of accelerating such processes.
May I?
Yes.
While, on a lighter note, while we highlight the challenges, I just want to place on the record that I have actually been quite pleased with the amount of information about TTMF and its reporting that I was able to download on the Facebook, not on the Facebook, sorry, on the internet, and the even advertising that you see in the media as it relates to TTMF. So I'm pleased about that. So my other challenge really had to do with that HDC process, because
Yes,
there
it's much
are
faster now.
many challenges, and with getting your financial records done in a timely fashion, I want to commend that, because we've seen other kinds of behavior. So I just really wanted to commend that. Thank you.
You want to respond?
Just to say that our financial statements are also on our website. I'm really surprised that you haven't been able to access it. I thought that going to 2014 was with a view to giving you the opportunity to look at the information in more detail, and the 2015 having been recently posted, the committee may not have had, and I apologize for that. If I had known, we would have supplied
Well, may I advise you that the modus operandi of our committee and the Parliament is a bit different from what you may be envisaging. Documents such as what you mentioned that was posted at the end of April cannot be sent us directly. It must be sent to the Parliament, and then it is then referred to the Public Accounts Enterprises Committee. It is only when that document is referred to us we can make reference and mention and do analysis of its contents.
Okay,
it cannot be done by you just handing it to me or anybody else handing it to me.
Okay, so then I'm not in control. I apologize.
Yes. But may I just ask this question? I realize that between 2008 to 2013, and if I go to 14, TTMF has been doing very well in terms of net income after tax. So you seem to be in a very good place from a financial point of view. I am seeing also, if I go to your audited financial accounts for the period 2014, where your retained earnings for 2012 was $21.3 million. Your retained earnings at the end of 2013 was $23.8 million. I didn't see for 2014 because 2015 is not before us. I would like to find out, one, how are these profits distributed in terms of dividends to your shareholders? Who are your shareholders, essentially? And what kind of dividends they would have received for the period 2008 right up to the end of 2014? That's one. What percentage, so we want the value, total, how much they received. We want to know the percentage received by each shareholder in terms of dividends. And also, how are these dividends or profits utilized by TTMF? TTMF TTMF will not receive dividends. It will be corporation sole and essentially the NIB.
That's correct, sir.
Right. The corporation sole provides any to you for retention purposes, or you pass on everything to the corporation sole as it relates to profits realized after tax by the TTMF?
Quite some time ago, I think it was in 2006, TTMF developed a dividend policy with the approval of its shareholders that caters to 40% dividend payout. So 40% of our dividend is paid to our shareholders, 51% to the NIB, and 49% to the corporation sole. That quantum of payout was based on the need to reinvest funds in TTMF to meet its funding requirements as well as to support its capital base.
You can probably give us an appreciation of what that has been like between 2008 to 2014. If you could generate a report.
Yes, sure. It's 40% of the net profit before tax, because we discount the impact of deferred taxation. So it varies somewhere between 20 and 26 million, but we can give specific numbers in writing.
I think Mr. Small wants to raise a point.
Thank you, Mr. Chair. I have a couple of very straightforward requests. I know earlier in the session there was a request by, I think, Member Gopi Singh for the issues on the breakdown of the delinquent customers, which we'll provide in writing. I just want to add to that request, when you do the analysis, you could provide us with the numbers, but also the monetary value.
Sure.
And also a breakout of how many of these are your customers and how many of these those customers are AGC customers. I don't expect you to provide that information on the floor, but if you could in the submission to the committee, we would appreciate it.
Just through the chair, though, just to let you know that once they have mortgages, they are customers.
They're your customers. Well, fine. I appreciate the clarification, Madam CEO.
But more than that, I think we can safely say that our HTC portfolio is one of our better performing portfolios, largely because HDC recipients tend to be salaried persons and mostly public servants at that. So we get salary deductions at source, and therefore that mitigates the risk of default and ultimately delinquency.
Well, that's excellent news to hear, Madam CEO. I have two other little issues. I've looked at the issues that you raised in your audit document. Have you, in the past couple of years, in terms of the major internal audits you've done, have there been any major issues identified that required attention by the executive?
Well, in preparing the audit reports, there are usually defects. There have been no systemic defects in our audit reports, but the audit is risk-based, and therefore where there is need for improvement in policy associated with those risks, they form a part of the action plan subsequent to the audit.
And I have one other little issue. Perhaps just for the information of the TTMF team, in my other utterances in other parts of this building, I'm a stickler for accountability and for making sure that public funds are properly utilized, and then when there's things to be provided to the citizens, that the citizens really gain access to it. I'd use that as a lead-in to the forward plan with TTMB regarding potentially doing an IPO. The record of state entities doing IPOs, in particular, I want to reference a particular financial institution. Some things went wrong, and citizens of this country were disadvantaged. And so far, the penalties have not been applied to those who've done wrong. So I want to ask the wonderful team at the TTMF, once you get to the stage of being TTMMB and you decided to do an IPO, to make sure that the interest, what are you going to do to make sure the interests of the citizens, ordinary citizens like myself and everyone else in this room, are protected so that we would have fair chance to have access to shares in what I believe is an excellent institution in this country?
Through the chair, TTMF's role, insofar as we can give influence to the process, will be one where we ensure that our reputational risk is minimized, and that, as we have in the past, ensure that policies and procedures are adhered to. NIB is the lead in this endeavor, and we will work closely with them to ensure that the members' concerns are addressed.
Much. I want you to impress upon them that this committee it is something that this committee feels very strongly about, that making sure we protect the interests of the citizens of Trinidad and Tobago. That's why we are here. And I thank you for your very comprehensive response. Mr. Chairman?
Thank you.
Like my colleague,
Mrs. Coburn thereafter.
congratulations on your financial ratios. Your return on equity and net income to shareholder equity, which has been averaging about 8 or 9% over a number of years. And that is appreciated for your company. Just some small questions. You said the HDC applicants can source funds outside of TTMF, like from credit unions and so?
From commercial banks as well, sir.
Right, okay, good. Now, there's a general uneasiness about TTMF has a group of lawyers that you all send your work to. And there are a number of citizens across the country who say, well, we have our lawyers. Why do we have to go and get our work done just by your lawyer? Why can't our lawyer do the work where they will get it cheaper? Could you make some comments on that?
TTMF's panel of attorneys has been developed based on certain specific criteria that would have evolved over the many years that we've been in operation. The panel of attorneys, or the attorney representing TTMF, seeks the interest of TTMF in the transaction. So the customer is welcomed to use his own attorney in the preparation of the deed of conveyance. But it is usually the case that where you use the same attorney that prepares the deed of mortgage, the fees are less. And that is why we tend to channel people through our panel of attorneys. But the customer always has the option to use his own attorney for his deed of conveyance.
But at the end of it, they have to come through the attorney of TTMF, and who has prescribed fees, which may be more than if the lawyer went through to complete everything on its own, with TTMF acknowledging and doing the search and so on, that the fee will be less than what TTMF lawyers are charging. That is a general statement made outside there by applicants, and I'm sure that you are aware of it. And also the general statement that is made that TTMF has preferred attorneys over the number of years. And there are certain law firms that get most of the work from TTMF. And why is there not an equitable distribution of law firms across Trinidad and Tobago? And over a number of years, same law firms are getting the work and are minting the money from the conveyances when others are kept away from it. Could you make some comments on that, Madam CEO?
TTMF has 26 attorneys on its current panel.
How long those, if you can give us in writing, how long those 26 attorneys or legal firms have been working for TTMF, and what additional firms have come on stream within a period of time to do the work of TTMF? Were these 26 the same 26 who have been there for a number of years, or are they new entrants into it and old ones omitted? Could you elaborate if you have any idea on it?
TTMF has 26 attorneys or legal firms on its panel. Some of them may have been there since day one, since over the 50 years of our operation.
And you understand the millions of dollars that they would have received in work from TTMF.
Because we have if I might, because we have so many attorneys on our panels, we are not able to give any one attorney a bulk of work. So the work is spread by rotation over each member of the panel.
Okay, well, we have 26 attorneys, and you have at an average 1,700 per year. That comes up to about 68 conveyances or 70 conveyances per person, and 70 conveyances, and you have somebody there for 50 years. It's an extraordinary amount of money. Why can't people choose their attorneys and let the attorneys outside for the clients do the work and bring it for vetting by your team, and who will charge you less fee? Why can't that happen? And I'm speaking from personal experience. Wherever you go to take a mortgage, the bank tells you this is their lawyer, and there are legal people who will do my work for me at a less cost, and that is echoed by thousands of citizens across who are seeking assistance from HDC, from TTMF.
Through the chair,
Yeah.
the deed of mortgage, which is the document that defines TTMF's relationship with its mortgager, must be confirmed, vetted, prepared by our attorney. It is that attorney that takes professional indemnity insurance in our interest. Our criteria for attorneys to our panel includes documentation of their qualification, membership in the law association, and professional indemnity insurance of a minimum of $5 million that may be backdated 10 years. So that is the criteria that our attorneys satisfy.
Well, which many more than 26 satisfy. There are hundreds who satisfy that in the country.
May I, could you supply the committee with the list of 26 firms that are on your panel, and for the period of time each one has been associated with the company?
Sure.
Could you also provide to the committee how many conveyances, as an example, each firm would have received in the last 5 years, as for example? And I think what Dr. Tim Gopi Singh is trying to advance is whether the TTMF would be flexible or inclined to look at a policy that allows the customer to work with his own attorney if in his or her assessment it will be cheaper, whether that is an option available to the customer, or is the customer tied to these 26 firms, or whether the customer has the flexibility to work with his own attorney. I think that is the point he's trying to advance.
Sorry, Chair. As I mentioned, the customer has the option to go to any attorney or his attorney of choice for preparation of deed of conveyance. That is a document that conveys the property from the vendor to him or her. It is the deed of mortgage that TTMF is more concerned about, and it is the deed of mortgage that we insist must be prepared by our attorney.
Deed of mortgage.
We have an indemnity in respect of performance as it pertains to the deed of mortgage.
Too short question.
Looking at your statement of financial position, under assets, you have mortgage loans as 3.066 billion. I'm a little unclear. If this is a mortgage loan, why is it positioned under assets? And then under liabilities, you have long-term debt as 2.029 billion. Could you just, I don't know if you have it before
You want to just refer to the document? Or what report is that?
This is the examination of the audited financial statements of TTMF for the period 31st December 2008 to 2014. Inquiry proposal. And what I read there is the 2014. Okay. I just want to, well, we can send this for them and let them give us some answers to it. Yeah. Right. Well, Under what we have here, under assets, you have mortgage loans 3.066 billion. And this is a Trinidad Tobago Mortgage Finance Company Statement of Financial Position document. I find it a little strange that a mortgage loan is under assets, but you will probably be able to tell us a little more about that. And long-term debt of 2.009 billion. Could you help us in indicating what is that long-term debt of 2.009 billion?
A mortgage loan is an asset to TTMF and a liability to TTMF's customer.
All right.
So our assets are mortgage loans, and we use our assets to securitize our debt, to secure our debt, or to collateralize our debt, and that is what you see as the long-term debt.
The client comes to you, you give them the mortgage.
And that's our asset.
But you collateralize that mortgage outside.
That's correct.
Right, so that's why you call it an asset to you.
That's correct.
Because
it's an asset to me that I use to raise funds.
And it's secured outside.
That's correct.
Right. And what's your long-term debt then of 2 billion?
The long-term debt is the bond issue. The bond issues are what we use is what we raise using the mortgage asset.
But initially you had indicated was approximately 1 billion, but I'm getting the figure of 2 billion here now.
No, I was asked how much we would have raised over the period.
But if your long-term debt is 2 billion, you would have obviously raised 2 billion rather than 1 billion.
No, that is the figure that you have there, sir, is the balance as at a particular point in time.
All right. If it's as a balance, it means that you have gone on the bond market to get, if you owe $2 billion, you have been on the bond market for $2 billion or more. But you indicated earlier on that you went on the bond market for $1 billion.
I had indicated that since 2009, we raised additional amount of more than $1 billion.
From since 2009?
In other words, we had a balance coming forward,
okay,
and we added to it.
So the difference between 2 and the 1 is from previous to 2009?
That's correct.
Thank you very much.
I recognize Mrs. Coburn.
Thank you, Mr. Chairman. Ms. Lashley, does the TTMF mortgage include the cost of home insurance throughout the period of the mortgage?
The mortgage itself doesn't, but we provide a group homeowners insurance coverage so that the mortgage payment is made up of the mortgage installment of principal and interest, a payment to cover the WASA payment, the Water and Sewerage Authority. In the times when we had land and building taxes, the payment would also cover that, and the insurance premium.
And would the TTMF be considering funding for the use of solar energy systems or similar green technology in the future?
Most definitely. We have not been approached for any such projects, but it is certainly one that we will consider favorably.
Okay, and my last question, well, it has two parts really. One is to commend you. I see you have a whistleblowing policy in place. So I want to commend TTMF for that, but I wanted to know whether the policy provides protection for whistleblowers who come forward.
Yes, the policy specifies that the whistleblower, who may want to remain anonymous, must not be victimized, harassed, or experience any penalty by virtue of their declaration.
Thank you very much, Mr. Chairman.
Yes, Madam CEO, could you give us a brief overview on the process for bids for concerning foreclosed property? In other words, when you finally get through with the court process, what is the process that TTMF employs in order to dispose of properties that persons have defaulted on once you get clearance from the court? Could you give us a brief overview of what it entails, the process?
Having received the writ of possession from the court,
okay,
we advertise the property for bids through the daily newspapers, usually for a period of at least 1 week, and giving persons an opportunity to submit bids over a 2-week period. We also allow for viewing of the property during that period. When the bids come in, They come in through our tenders process to 2 officers who open and record the bids received. We then go to a valuer on our panel to determine the market value of the property. And the bid chosen is the one that best matches the market value. If we get bids that do not meet the amount of the market value, we go to our attorneys to get some feedback as to whether we should be going back out based on the difference between the bids received and the market value. And it is with their consent that we accept the highest or any other bid.
Now, if the market value, let's assume, just hypothetically, is 500,000, $500,000, but the customer would have paid, although the court has granted the right of TTMF to foreclose, he would have paid or she would have paid 300,000 over the period because of hard times, couldn't continue, but has paid to TTMF 300,000, but has outstanding, that would have been for 20 years, and for the next 10 years, had 150, 200, let's say 200,000 or thereabout, with interest outstanding. The person who has lost his property in this instance, would he be entitled if the market value is 500,000 or 550? You sell it for 550. Would that person receive the 300,000 that he would have paid to TTMF over the 20-year period? And would that person now be called upon to reconcile the outstanding sum of 250,000 that the 10-year period is still needed to close? We need to close that 10-year gap. What exactly happens? Because the public is very concerned about the punishment that they are subjected to by mortgage companies. And I just want to know, as a progressive company, whether you have the same approach to those as in the commercial sector, or do you have a different policy to treat with these matters? Is the property owner who has lost his property and who has paid 3/4 of his mortgage, would he be entitled to any refund once you have a foreclosure? I'm trying to get clarification on that.
If the market value is 550,000 and the balance on the mortgage is 125,000, we will settle the balance on the mortgage and any legal fees that may have arisen out of the process of foreclosure, and the difference goes back to the customer.
The difference, or
the change.
It goes back to the customer.
Yes.
No, I'm happy to hear that. May I also ask, Madam CEO, your strategic plan for 2015 to 2018 has been submitted to the Line Ministry for review and feedback. Could you tell us when this plan was submitted to the Line Ministry, which would be the Ministry of Housing and Urban Development? Is that your Line Ministry?
Yes, it is, sir.
Right. And what is the status of the plan at this time? Where are we with that plan for 2015 to 2018 as we speak?
The strategic plan 2015 to 2018 was submitted to the Ministry of Housing in March of 2016, accompanied by Business Plan 2016 and our budget for 2016. We have not had any feedback from the ministry, but we are following our business plan to December 2016.
Deputy Permanent Secretary, could you shed any light on this matter?
I was, Mr. Chairman, I was told that the strategic plan is now with the minister.
Now with the minister?
Yes.
Could you submit to us in writing when this strategic plan that is so important for this organization, when would that plan be the review be completed and submitted so that the TTMF can proceed with its work legitimately and in accordance with, established principles and rules. Could you get that to us?
Yes, I will.
And Madam CEO, I have another question for you. We would like to ask you, because I did indicate very early, that our committee is here to help. We want to help make your organization more efficient in terms of the delivery of services to your customers. What, therefore, would you like to submit as recommendations to seek to improve the level of efficiency, effectiveness, and economy of TTMF as it seeks to accomplish, its vision, mission, and objectives to your customers and by extension to the nation? You can give us a summary here and then generate in writing, your thinking as it relates to how can the PAEC help you so that we can assist in achieving or helping you achieve your vision, mission, objectives, and goals in the final analysis.
Chair, I thank you for your very generous offer. It has been our practice at TTMF to promote self-sufficiency in how we do the things we do. And therefore, that aspect of our operation that fits into the public policy mandate is where we look to ministry relationships, either finance or housing and development, for opportunity. Such opportunities as they may arise are sometimes blocked by bureaucracy that would not allow for the culmination of our processes in a timely manner. For example, we have a situation now where the land and building taxes have been are to come back, are to resume, and it is to resume in January of 2016. So when you sell a property, as at today, you are owing 6 months of land and building taxes. But we have not been able to obtain guidance as to how it will work. So vendors who are selling now are not paying in the land and building taxes, and it is possible that purchasers who buy now may be owing 6 months land and building taxes without even knowing it. So it is things like that that I think if we have more interaction, more proactive guidance, that it would help in terms of our efficiencies and effectiveness. But other than that, I think our relationships, as we've earned over the very many years of our operation, has nurtured well to help TTMF look to its stakeholders for improvement in our processes and our operations.
Well, I'll ask Dr. Tim to ask the final question before I bring the curtains down.
When I asked earlier about the long-term debt of approximately $2 billion, is that the debt that TTMF has now on its books? $2 billion, approximately. And
we're probably up to $3 billion now, let me check.
Now it's up to about
2.5.
Right, and how is that going to be how is that continuing to be financed? By the bond issue, if you have to reduce that? You owe that to whom?
Most of it are bondholders, and we make payments monthly, quarterly, based on the terms of the bond issue.
I see that you have an interest income of approximately $220,000 per year, $220 million per year.
Yes.
And it's from that you pay towards the bond payment?
That's correct. Based on installments received or interest income, we make payments to our interest expense.
But you have an expense you're receiving approximately $250 or $260 million per year, but you have an you have an expense on that of 126 or 120 something, almost 50% of it. Why is that expense so high on your interest income?
Because we're not a deposit-taking entity. So because we fund using bonds, we fund at market rates based on the government sovereign rate plus 150 bips to 175 basis points. So our borrowing rate is higher than the funding cost that would operate in in commercial banks, for example.
So it comes up to the end about 50% of your interest.
That's correct.
Interest income.
Yes, that's correct.
All right. Thanks for the clarification.
Yes, Madam CEO, it has been said that if you want to have a well-functioning institution or organization, you need to have talent, competency, and capability. I think you represent all elements.
Yeah.
And I really want to, on behalf of the Public Accounts Enterprises Committee, to extend our collective thanks to you and to the team and to our colleague from the Ministry of Housing and Urban Development and my colleagues from the Ministry of Finance Investments Division for being here. I thought that it was a very wonderful experience interacting with you. I think that the work that TTMF has been doing over the years is manifested by the excellence that we have seen this morning. And I really want to thank you in particular and your team in general for being so cooperative, being so open and frank with us in your responses. And we have some areas that we'll probably need to clarify further, and that will be generated through some written questions to you, which I know that you will respond to. So I will give you the last say at this time. Any final word that you'd like to say before we bring down the curtains?
Thank you very much, Chair, and thank you so much for having us. We look at our presentations here where we've only been before such committees once before. We were before the Joint Select Committee and now before this austere committee. And it is really a public relations effort for us. We use this as a means by which we tell our story, and we thank you very much for allowing us the opportunity so to do. Thank you.
Thank you very much. Members, this meeting is now suspended until further notice. Thank you very much. Yeah, well, I thought it was a good meeting. She's a very competent